Picture a bustling marketplace, alive with energy and anticipation. But here, instead of fruits or fabrics, people are exchanging something far more valuable: ownership in companies, big and small. These pieces of ownership are called stocks, and every trade represents a bet on a company's future. Whether it's a handshake on a trading floor or a tap on a smartphone, stocks are bought and sold every second, connecting millions of investors worldwide. When you buy a stock, you're not just making a transaction, you're becoming a part owner of that business. Your fortunes rise and fall with the company's success, giving you a stake in its story. The stock market is the grand stage where all these trades happen. While it once meant crowded trading floors, today most action takes place online, making it accessible to nearly anyone with an internet connection. Companies sell stocks to raise money for growth, like building new factories, hiring more workers, or launching innovative products. This funding helps businesses expand and create jobs, fueling the economy. For individuals, investing in stocks is a powerful way to grow their savings over time. Whether you're saving for retirement, a child's education, or a dream home, the stock market offers opportunities to build wealth and achieve life's big goals. The stock market also acts as a health check for the economy. When markets rise, it often signals optimism and confidence in the future. When they fall, it can reflect uncertainty or trouble ahead. Indexes like Japan's Nikkei 225 or the S&P 500 in the US track the overall direction of the market, summarizing the performance of hundreds of companies in a single number. These indexes help investors, businesses, and governments gauge economic trends, spot opportunities, and make important decisions about spending, investing, and policy. Stock prices move for many reasons: company profits, economic health, government policies, and global events like natural disasters or political changes. Even a single news headline can send prices soaring or tumbling. Understanding these basics helps you make sense of financial news, see how world events impact your investments, and realize why market moves matter to everyone, not just professional traders. A strong day for tech in Japan, or worries about China's economy, can ripple across the globe, affecting markets, businesses, and everyday people everywhere. The stock market truly connects us all. On Tuesday, November 11, 2025, Asia's financial markets opened to a day full of anticipation and uncertainty. Investors across the continent were closely watching for signs of momentum, hoping for positive cues after a volatile week in global trading. Asia's markets told two very different stories, reflecting the region's complexity and the unique challenges each country faces. In Japan and South Korea, optimism was in the air. Their main indexes climbed steadily, fueled by a surge in technology stocks and renewed confidence in the sector's growth potential. Investors cheered as companies reported better-than-expected earnings, and the mood on trading floors was upbeat. Meanwhile, China's markets, including the Shanghai Composite and CSI 300, struggled. Both indexes fell sharply, dragging Hong Kong's Hang Seng down with them and casting a shadow over the region's overall performance. Investors in China were increasingly worried about slow economic growth, disappointing government data, and ongoing concerns about the property sector. These anxieties led to a wave of selling and a cautious mood among traders. The positive momentum from Wall Street overnight helped boost sentiment in Japan and South Korea, giving their markets a lift. However, this global optimism wasn't enough to overcome China's local concerns, which weighed heavily on its markets. This split performance highlights how investors are now more focused on each country's unique situation, rather than treating Asia as a single, unified market. Local factors are playing a bigger role than ever before. Good news in one country doesn't always lift its neighbors. Each market is responding to its own set of challenges and opportunities, making Asia's financial landscape more fragmented. Japan and South Korea rode a tech rebound, with investors betting on innovation and future growth. In contrast, China's persistent economic worries and regulatory uncertainties led to more selling and caution. The result was a clear divide between rising and falling markets, a pattern that's becoming more common as global and local forces pull in different directions. Asia's diversity means that local factors, like government policy, economic data, and even cultural trends, are driving each market's story in unique ways. To truly understand the region, you have to look beyond the headlines and examine what's happening on the ground in each country. Local perspectives and experiences shape the market's direction. It's a reminder that global headlines often mask very different local realities. For investors and observers alike, Asia's markets demand a closer, more nuanced look to grasp the full picture. Japan's stock market rose, led by a rebound in technology companies. The Nikkei 225 gained 0.6%, signaling renewed investor confidence. SoftBank Group's stock jumped 3% ahead of its earnings report, boosting the entire tech sector. Sony also climbed after reporting better-than-expected profits and raising its outlook. Strong results from these giants created a ripple effect, encouraging more buying across tech stocks. The optimism was fueled by both local company news and positive signals from Wall Street. U.S. tech gains often inspire similar moves in Japan, showing how connected global markets are. The day's rally showed investors still believe in the long-term growth of technology. Japan's market climbed on a mix of strong earnings and global tech enthusiasm. South Korea's Kospi index surged 1.5%, outpacing Japan, thanks to its tech giants. Samsung Electronics and SK Hynix, both major chip makers, saw their stocks jump nearly 4%. Their strong performance lifted the entire market, signaling robust demand for tech hardware. This rebound followed recent worries about an AI bubble and falling tech prices. Investors shook off those fears, betting on the long-term future of AI and chip makers. Samsung and SK Hynix are central to the global tech supply chain, so their gains matter worldwide. The Kospi surge was a clear vote of confidence in South Korea's tech sector. When these companies rise, it's good news for the global industry. The market's strong day showed investors believe the technology wave is far from over. South Korea is riding high at the crest of global tech growth. While Japan and South Korea celebrated, China's markets fell. The CSI 300 dropped 0.7% and the Shanghai Composite slipped 0.4% as investors sold off stocks. The main reason: persistent worries about China's slowing economy. Recent economic data showed little improvement, making investors nervous about future profits. Government promises of stimulus weren't enough to restore confidence. Investors want to see real results. Even a slight uptick in inflation was dismissed as a temporary holiday effect, not a sign of recovery. Until there's clear evidence of economic strength, caution rules the market. Investors are looking past small positives and focusing on the bigger picture: slow growth. China's market story is one of skepticism and waiting for real change. For now, economic worries outweigh any short-term good news. Hong Kong's Hang Seng Index fell 0.2%, mirroring declines in mainland China. The city's market is closely tied to China's, with many mainland firms listed in Hong Kong. Worries about China's slow growth quickly spread to Hong Kong investors. Despite strong gains earlier in the year, short-term concerns now dominate. Earlier optimism about China's tech ambitions and AI leadership has faded for now. The day's losses highlight the tension between long-term hopes and immediate economic worries. Hong Kong's market followed China's lead, as caution took center stage. Beyond the big three, other Asian markets had their own stories. Singapore's Straits Times Index rose 1.2%, led by strong gains in local banks. Australia's ASX 200 slipped 0.1%, dragged down by a 6% drop in Commonwealth Bank after a disappointing report. India's Nifty 50 futures pointed to a slight rise, continuing its strong run above 25,000 points. India's market remains one of the world's best performers, fueled by a robust economy and foreign investment. These results show Asia's diversity. Singapore's strength came from banks, Australia's weakness from banking woes, and India's steady growth from economic momentum. Each market reacted to its own local news and conditions. Local factors, not just global trends, drive daily market moves. Asia's financial landscape is shaped by unique stories in every country. It's a reminder that one headline never tells the whole story. You might wonder why Asian stock markets matter to you. Many people's retirement and savings funds are invested globally, so market moves in Asia can affect your nest egg. Strong tech markets in Japan and South Korea signal global demand and economic health, which can mean more jobs and better wages worldwide. When China's economy slows, it buys less from other countries, impacting businesses and jobs far beyond its borders. A falling market in Shanghai can be an early warning for the global economy. Even if you don't invest directly, These moves influence company decisions, interest rates, and job opportunities. The stock market's ups and downs ripple through the economy and into our daily lives. Understanding these connections helps you make sense of financial news. What happens in Asia's markets can impact your wallet, wherever you live. Looking ahead, investors are closely watching for signs that today's market trends will last, and whether the optimism seen in recent sessions can be sustained over the coming weeks and months. In Japan and South Korea, the big question is whether the tech rebound is just a short-lived blip or the start of a new era of sustained growth for the region's most innovative companies. Upcoming earnings from major tech firms like SoftBank will be key, as investors look for strong results and positive guidance to confirm that the sector's momentum is real. Many are also watching for signs of new investments and breakthroughs in artificial intelligence, robotics, and other cutting-edge fields that could drive future growth. In China, all eyes are on whether government stimulus measures will actually translate into real, lasting economic improvement, especially as policymakers try to boost confidence at home and abroad. Investors want to see stronger data on retail sales, hoping that Chinese consumers will start spending more and help power the recovery. They're also watching for improvements in factory output, which would signal that demand is picking up both inside China and in global markets. And the property sector remains a major focus, as investors look for signs that the housing market is stabilizing after a turbulent period. Meanwhile, U.S. interest rates and Wall Street's performance will also shape global sentiment, influencing how much risk investors are willing to take in Asia and beyond. Higher U.S. rates can pull money away from Asia, as global investors chase better returns in American markets, putting pressure on Asian currencies and stocks. On the other hand, a strong Wall Street often boosts confidence worldwide, encouraging more investment and risk-taking. Ultimately, it's all about confidence. Investors are betting on tech's future, waiting for China's recovery, and hoping that positive momentum will continue to build. These trends shape business growth, jobs, and savings for everyone, affecting not just big corporations, but also everyday people across Asia and the world. By watching the markets, we gain insight into the forces shaping our financial future, and the opportunities and risks that lie ahead.